Let's be real here. If technical analysis is the holy grail to trading, we're all millionaires, right? You see, when you've been in the markets for long enough, you start to feel it. Something's missing. I've analysed the charts, I've drawn the lines, I know the patterns, yet it doesn't quite add up. That's where macro trading comes in. Imagine this, you're staring at the Euro-US dollar chart, your technicals are locked in. RSI is looking good, moving averages pointing upwards, the Fibonacci pullback is just beautiful, the breakout is waiting to happen, you pull the trigger, and then the ECB hints at hiking interest rates. The chart drops through, you lose your money instantly, and you're left sitting there thinking, what just happened? This is why macro trading exists. It's not just about reading the chart, it's about reading the world. Macro trading is the bigger picture. It's understanding what's happening with the governments, global trade, economies, everything that forms the very market that you trade. Let's take a quick look at history, in particular the 2008 financial crisis. If you relied solely on technical analysis, you were blindsided, you were caught off guard, whereas macro traders were able to look at the full macroeconomic picture, realizing that banks were collapsing, the economy was falling, and the Fed was about to start printing money like they never have before. The real opportunities came from understanding these factors. Or look at 2020, the global pandemic. Now, I'm not saying macro trading predicted the global pandemic, but one thing we did do is trade the rebound. The V-bottom, the thing that technical analysis failed to present why it happened. Well, the real reason we recovered so quickly in markets from that 2020 pandemic was because of the billions in government stimulus packages that were delivered for everyday people. Macro trading shown this, and that is why we recovered so quickly. Technical traders once again missed out by not understanding the why. So what does macro trading actually look like? Well, it's a blend between economics and market timing. We look at things like central bank interest rates, monetary policy, inflation rates, unemployment, GDP. We're looking at geopolitical events, the real stuff that drives the market. Think of it like a game of chess. Every move has hundreds of variables that goes into it. Technical analysis only shows you the picture once the move has happened, yet macro analysis can hint at where that move may go, bringing you closer to an edge. When a currency's central bank hikes or cuts interest rates, the currency value changes. When inflation in the US spikes, crude oil moves with it. Look at this chart. Understanding these connections, that's an edge. Now I get it. Some people think macro trading is just a fancy word for guessing, but there's a structure to it. Macro trading is data driven, research heavy, and deeply tied to economic fundamentals. It's not about gambling on the news, it's about anticipating moves based on factual events. And the beauty of macro trading is you're not boxed into a single strategy. You're looking at a macro landscape. You're finding opportunities in currencies, stocks, commodities, wherever there's a ripple effect. Here's the thing. Technical analysis is powerful, no doubt. But the markets don't exist in a vacuum. They're real people reacting to a world that is constantly shifting. Technical analysis tells you what happened, but macro analysis tells you why, and often can hint at what happens next. So the next time you look at a chart that looks too good to be true, you can't fathom why it's happened, what's driving this, that is where macro analysis comes in. I challenge you, start looking beyond the charts. Dig into central banks, economic policy, understand the why and what's really happening with these markets. Technical analysis is part of the picture. But when you want to know what's really happening, that's where macro steps in. That's where the true advantage lies. Welcome to the world of macro trading.